Russia just invaded Ukraine. The United States and European nations have responded with harsh sanctions. The market opened down across the major indexes. The stocks in my portfolio are nearly all in the red for the day. Keep in mind, this is on top of the existing market correction that's been happening over the past few months. Both the stock market and the world have a lot of questions. Is this the new Cold War? Will this start World War III? How will it impact the future of Europe and NATO? Lots of questions. But should this event impact your investing strategy? That's what I'm going to discuss today, using some wisdom from the legendary investors Warren Buffett and Peter Lynch to help answer that question. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. First, I'm going to show you this clip of Warren Buffett from 2014. It's actually perfect because it takes place when Russia had just invaded Crimea. Although less severe, the surrounding sentiments are nearly identical to today.
When people start to think, well, this could be the beginning of something really bad, it could be even a World War III situation, it could be a return to the Cold War, does any of that ever go through your mind?
Well, if you tell me all of that's going to happen, I will still be buying the stock. You're going to invest your money in something over time. The one thing you could be quite sure of is if we went into some very major war, the value of money would go down. I mean, that's happened in virtually every war that I'm aware of. So the last thing you'd want to do is hold money during a war. And you might want to own a farm, you might want to own an apartment house, you might want to own securities. But I mean, during World War II, the stock market advanced, and the stock market is going to advance over time. American businesses are going to be worth more money. Now, dollars are going to be worth less, so that money won't buy you quite as much. But you're going to be a lot better off owning productive assets over the next 50 years than you will be owning pieces of paper, or I might throw in bitcoins.
So what happened since then? The world moved on, and the S&P 500 has risen over 127%, not including dividends reinvested. American businesses have continued growing earnings and becoming more valuable. This is why it's so important to focus on the value of the asset itself and not all of the news of the world. This doesn't just apply to war, but nearly all of the worries you hear about in the media. Peter Lynch does a great job explaining this in the following clip.
There's always something to worry about. This is the difference. This is what happens in the stock market. Because, see, everybody's got the brain power to do well in the stock market. The question is whether you have the stomach for it. That's the key organ in the body. There's always something to worry about. So people weren't buying stocks in the 50s because they thought that another Great Depression was going to happen. In addition, people were very scared about nuclear warheads and nuclear war in the 50s. People were building fallout shelters, stocking with canned goods. There's something about going to Vermont, building a fallout shelter, putting canned goods in it, that you don't buy Minnesota Mining or you don't buy Eastman Kodak. I mean, the syllogism just doesn't work out, that you're buying lots of water, buying a shotgun, buying frozen food that will stay in the freezer with your own generator, and you're looking at growth stocks. Doesn't seem to work out that way, you know. Every one of these little countries has enough warheads to blow the world up 88 times. Right? Who's built a fallout shelter there, you know? We stopped worrying about it. I mean, there's always something to worry about. In the 50s, it was depression and nuclear war. The 50s was the best decade this century for the stock market, except for the 80s. Only slightly better. The 80s were only slightly better. People didn't expect a lot. We had an okay, it wasn't a great decade. They just didn't expect much. We made it through. And the stock market was terrific. Do you remember when oil went from 4 to 40? Remember that period? Oil went from 4 to 40, and the experts said it was going to go to 100, and all the countries of the world were going to go bankrupt. And then the big banks are going to go bankrupt, and we're going to have a Great Depression, and the stock market's going to go down, and you're going to wind up selling pencils and apples. You know, well, I remember when oil went from 4 to 40, and the experts said it was going to go to 100. Within 2 years, oil was at 14. The experts, now much higher paid at this point, are saying it's going to go to 4, and we're going to have a depression. And people believed it again. You know, I remember when the money supply was growing too fast, and he said we're going to have a depression. Then it was growing too slow, we're going to have a depression. Then the Mideast was going on in the world, remember that one? The Mideast was going on in the world, they weren't going to buy our bonds, and the market would crash and we're going to have a depression. Then Japan was going on in the world, remember that one? Japan was going to have all the assets, and they weren't going to buy our bonds, and we're going to have a depression. Within 3 years, the Nikkei Dow had gone from 40,000 to 16,000. The banking system was in trouble, and people said Japan was going to collapse, and we're going to have a depression. I mean, people had, on their prayer list, at the end of the day, they had eliminated crippled children and Mother Teresa. They're praying for Japan. I mean, it's a country with a 15% savings rate. It's so bizarre. Commercial real estate, global warming. And I think as the older you get, the more nervous you get about these things. I think it's very valuable. I think while younger people are better investors, is they're not worried. They haven't heard about all these crises, and they're with children. I think if you don't have any kids, you got to rent some kids for the weekend. Get a 7-year-old and ask him if he knows about the money supply, how fast it's growing. Ask him if he knows about the shape of the yield curve is the wrong shape of the yield curve. Or that we're 48.3 months into the economic recovery and the average recovery lasts 52.3 months. Ask an 8-year-old if they know about that. 8-year-olds have a very high expectation about the next 20 years. That's what you need to do. The more you get away from 8-year-olds, the more you get away from 11-year-olds, the more you start reading these crazy things you read over the weekend. But I'll guarantee you, the market will be a lot higher in 15 years. It'll be a lot higher in 25 years. What it's going to do in the next 1 or 2 years, I don't have any idea. So I don't worry about that. I know we've had 96 years a century, and the market's fallen 53 times. We've had 53 declines of 10% or more. So 53 declines in 96 years. Once every 2 years, we have a 10% decline. Of the 53 declines, 15 have been 25% or more. So 15 in 96 years, about once every 6 years, the market falls 25% or more. That's what we call a bear market, you know that. And it's going to happen. I don't care when it's going to happen. I would love to know. Obviously, it would be very useful to know when it's going to happen. It doesn't make a difference to me. Corporate profits will be a lot higher 8 years from now, a lot higher 16 years from now, a lot higher 30 years from now. That's what I deal with.
When investing, your focus always needs to be on the underlying business. What are the company's current earnings? How much will their future earnings grow? How sure are you? And is it attractive based on its current price? That's the game. If you're focused on the macroeconomy or the news of the time, you will always be able to find a reason not to buy. So with this Russia and Ukraine crisis, you need to ask yourself whether this event will significantly impact the long-term earning power of the businesses you invest in. Will Disney earn less in the future? No. Will Microsoft? No. Will Apple? No. Will PepsiCo? No. Will Coca-Cola? No. Will McDonald's? No. The focus always needs to be on the business. So is this event impacting my investing strategy? No. I'm going to continue buying high-quality businesses at fair prices and hold long-term. In fact, I bought more today, and if you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. Thank you for watching Dividend Data. I'd greatly appreciate it if you could leave a like and subscribe to the channel. Check out dividenddata.com for my dividend investing software. I have a new stock review video coming out in the next few days. Please leave a comment below, and thank you for watching.